The origins of the trade war between the U.S. and China began when U.S. President Donald Trump raised tariffs on imports from China in 2018. Trump stated that China was importing more goods than the U.S. and that he wanted to address this trade imbalance. Behind this step were also allegations that China was infringing on U.S. intellectual property rights and making it harder for U.S. companies to operate in China. Trump's first move was to impose a 25% tariff on $34 billion worth of Chinese imports. China retaliated with similar tariffs on $34 billion worth of U.S. products. These reciprocal moves signaled the beginning of a trade war between the two countries. Over time, several rounds of negotiations took place between the U.S. and China. During these negotiations, some agreements were reached between the parties, but a full end to the trade war was not possible. With the Phase 1 agreement signed in 2020, the U.S. reduced some tariffs, but many duties remained in place. Finally, China's imposition of an additional 34% tariff on U.S. products gave the trade war a new dimension. The move has raised concerns that it could lead to imbalances in the global economy. Details of China's new retaliation. China's 34% tariff on U.S. products came into force on April 10, 2025. This decision came in retaliation to the U.S.'s earlier tariff hikes on some Chinese imports. With this move, China showed that it is taking a tough stance against the U.S. trade policies. The tariffs are particularly focused on technology products, the automotive sector, and agricultural products imported from the U.S. It was interpreted that China aimed to reduce the competitiveness of U.S. companies in the Chinese market with this step. Concerns were also expressed that this decision could have negative repercussions on the U.S. economy. China's retaliatory decision initiated a new phase of the trade war between the two countries. This could lead to changes in global trade flows and affect other countries as well. With this move by China, it is eagerly awaited how the U.S. will respond. Blacklist for American companies. Who is affected? In addition to China's additional tariffs on U.S. products, many American companies have also been placed on a blacklist by China. This list means stricter controls and restrictions on U.S. companies operating in China. The blacklisted companies include major companies operating in the technology, energy, and agriculture sectors. For example, some restrictions were imposed on U.S.-based technology giant Apple's supply chain in China. In addition, the authorization of U.S. energy companies to start new projects in China has been restricted. In the agricultural sector, there were difficulties in importing U.S. products such as soybeans and corn. These decisions will negatively affect the presence and operations of U.S. companies in the Chinese market. It may also reduce the willingness of U.S. companies to invest in China. China's move could weaken the global competitiveness of U.S. companies. Black Friday effect on U.S. stock markets. Following the announcement of China's 34% tariff on U.S. products, U.S. stock markets plunged sharply. This development became known as Black Friday on Friday, April 10th. Futures crashed in the U.S. stock markets, and the main indices lost significant value. The S&P 500 Futures Index fell by 4.1%, the Nasdaq 100 by 4.6%, the Russell 2000 by 4.0%, and the Dow Jones Index by 3.64%. These declines raised concerns about how the U.S. economy might be affected by trade wars. Investors began to flee the markets, worried that trade wars could lead to imbalances in the global economy. This development had a negative impact not only on U.S. stock markets, but also on global markets. Similar declines were seen in European and Asian stock markets. Investors started to assess the long-term impact of trade wars and started to avoid risky assets. Potential impacts on the global economy. The effects of the U.S.-China trade war on the global economy are not limited to these two countries. Trade wars can alter global trade flows and indirectly affect many countries. This can lead to imbalances in the global economy and negatively affect growth forecasts. The World Trade Organization, WTO, stated that trade wars have lowered global trade growth expectations. In 2023, global trade growth expectations were revised downwards due to trade wars. These developments create uncertainty in the global economy and cause investors to avoid risky assets. Trade wars are also affecting global supply chains. Companies are trying to avoid tariffs by restructuring their production and procurement. This may increase production costs in some sectors and may be reflected in consumer prices. Another impact of trade wars could be to increase global inflation. Higher tariffs could push up the prices of imported goods, leading to inflationary pressures. Therefore, central banks may need to adjust their monetary policies. How will the balance of trade between the two countries be affected? The trade wars between the U.S. and China have a significant impact on the balance of trade between the two countries. The U.S. is importing more goods from China, and this is increasing the U.S. trade deficit with China. To reduce this deficit, the U.S. aims to raise the prices of goods imported from China by increasing tariffs. However, as we have seen in the past, such moves do not always yield the expected results. Some of the goods that the U.S. imports from China are imported from other countries, which can increase the U.S. trade deficit with other countries. For example, if the U.S. starts importing some of the electronic products that it used to import from China from countries such as Vietnam or Thailand, the trade deficit with these countries may increase. Moreover, U.S. tariff hikes can also increase the cost of production for U.S. companies. This can reduce the competitiveness of U.S. companies in global markets. China, on the other hand, can weaken the presence of U.S. companies in the Chinese market by imposing additional tariffs on U.S. products. Instead of changing the balance of trade between the two countries, these trade wars can reshape global trade flows. This can cause other countries to reconsider their trade policies. Next steps. Possible U.S. countermoves. It remains to be seen how the U.S. will respond to China's 34% tariff on U.S. products. The U.S. could develop various strategies against this retaliation. First, the U.S. could impose tariffs on more products imported from China. This could be particularly effective in the technology and energy sectors. In addition, the U.S. could impose stricter controls on Chinese assets in the U.S. and make it more difficult for Chinese companies to operate in the U.S. Another possible move would be for the U.S. to take tougher measures against China's intellectual property rights violations. The U.S. alleges that China violates the intellectual property rights of U.S. companies and could crack down further. In addition, the U.S. may aim to build a broader alliance against China by increasing cooperation with other countries. This could involve building stronger relations with U.S. allies, especially in the Asia-Pacific region. Finally, recognizing that these trade wars could be a long-term process, the U.S. could aim to further inward-orient its economy and strengthen its domestic market. This could involve the U.S. developing policies to increase its own production and reduce its dependence on imports. These steps will determine the future shape of the U.S.-China trade war. The best scenario for the global economy is for both sides to reach a compromise through negotiations.